Turkey's central bank could cut interest rates yet again today as the markets seek to know what happens next in monetary policy. A rate cut could fly in the face of the traditional monetary policy, with inflation topping 83% year on year in September. Simone Foxman is with us. So what can we get? Simone, good morning.
Yeah, good morning, Mattis. Well, it's hard to know exactly how much the central bank could cut here, but that is the expectation. None of this follows what we think of traditionally as monetary policy, but we've seen 100 basis point cuts over the last 2 months, and so that's the median estimate today, even despite inflation at over 83%. And economists they believe that inflation likely even higher than that, likely somewhere along the line of producer price index, which is up at 150%. I've been talking to a lot of economists and investors recently about what would change the game here. Is an interest rate cut something that is really going to affect the markets? For the most part, they say no. These interest rate cuts at this point sort of meaningless in this overall scheme of things. What they're really looking for is a crash in the Turkish lira. We've seen a steady decline of the lira against the dollar all year, but they're looking for a sharp move, which might indicate a loss of domestic faith in Turkey's fiscal health. That could lead to a reversal of policy. It could also be the nail in the political coffin for President Erdogan, who's been calling for these lower and lower interest rates, single digit by the end of the year. He has to hold elections by next June, but as yet, economists, investors, just simply not sure what that spark is for that ultimate move they see as pretty much inevitable.
Yeah, and it will be the focus of many studies on unorthodox monetary policies and dysfunctionality of that, if you're arguing that way. In terms of other companies that we're looking at, a Bloomberg scoop, they're pushing forward with plans to IPO their trading unit. What are the details?
Yeah, that's not actually a surprise. Bloomberg first broke the news that Aramco Trading was interested potentially in IPO back in May when it hired advisors. But what is surprising perhaps to hear is that the company is maybe pushing ahead with these plans. Usual caveats apply, of course, despite the IPO market across the Gulf turning a little less rosy over the past couple of months. The transaction could value the unit, we understand, at some $30 billion. That would make it one of the largest IPOs this year. Gulf energy companies, national energy companies, have been looking to beef up their trading units. Qatar Energy saying it wanted to do the same, as these look increasingly profitable amid the volatility we've seen in the energy markets. Certainly raising some cash in the market either later this year, come 2023. But those are the kind of dates we're hearing could help Aramco continue on that goal.
And a day after the ownership shift, Etihad Aviation names a new CEO. Tony Douglas remains as an advisor to ADQ. Who steps in, and why do we think they chose this particular chap?
Yeah, Tony Douglas remaining an advisor for now, off to some unspecified opportunity elsewhere. The speculation he could go to Saudi Arabia to help them build an airline. But the new guy at Etihad, Antonoaldo Neves, he was previously the CEO of TAP Portugal, their flag carrier, and now that is state-run. He stayed on until the company received an injection of capital. Then he was forced out during the midst of the pandemic. He has a particularly close relationship to JetBlue Airways founder David Neeleman. Neeleman and a crew had taken TAP private back in 2017, and then that was when Neves came on. He also had run Azul Airlines, a low-cost carrier in Brazil, which Neeleman also began.